traders, welcome to a new day trading strategy video of mine. Today we're going to be talking about Bitmex sentiment on the site of Coinfarm.online, this site here, and I will attach it in the description below. So as you can also probably see, I did not put my webcam in this video because I actually couldn't fit the webcam on the screens that I'm going to be showing on sentiment and price. So unfortunately, you guys will not be able to see me today on Friday. All right, so with Bitmex sentiment, a few guidelines and rules that I first want to talk about when we look at sentiment and when we look at Bitmex sentiment is we're interested in sentiment plus the price result. So what this means is that we're interested in looking at, is price in an established trend? How much has price moved up as a result of the buying or as the result of the selling? And how much of a spike in longs or how much of a spike in shorts have we gotten? And one way we can look at that is first see that a spike in longs plus a weak to average bullish candlestick typically is going to be bearish, meaning buyer exhaustion. The reason that occurs is on Bitmex and really on many exchanges, there are going to be many traders on the sidelines looking to buy or to sell. And if price goes up in an established uptrend, so it's been going up for some time, and then you see a spike in buying, but really not a large result in bullish movement, then that could be tapping into the potential buyers who wanted to buy who have already bought, meaning that a lot of the traders who wanted to buy are already positioned in the market, so that price is going to have a harder time moving higher. And that's another reason why it's even stronger when price is in an established trend, and then you see a spike in buying, or price is in an established downtrend, and then you see a spike in selling. This typically is going to indicate a reversal, but of course you always want to look at momentum, as a spike in longs plus a strong bullish move in the early stages of a trend is typically going to be bullish. A spike in shorts, strong bearish move in the early stage of a downtrend is typically going to be bearish. That may seem complex at first and hard to differentiate, but just remember the three things. One, is price in an established trend? Meaning, do most traders look at this and say it's a downtrend? Do most traders look at this and say it's an uptrend? Two, how much results has price made based off that buying or based off that selling? And three, how much buying or selling have we had? So with that, let's apply all of these kinds of guidelines to here. So this is what the Bitmex sentiment chart is going to look like when you pull it up. And what we have here is we can see that these are 1 minute bars, not candlesticks. We can see that this is a 1 hour chart from 2314 to 2215. We can see the amount of longs percent and the amount of shorts percent in that last hour. So we see here that at 2227, we had a large amount of buying. 2228, we had a large amount of buying as well. And then 2229, we had a very large amount of buying as well, as you can see here. And 2230, we had a large amount of buying and selling here. So what this means is not that the total longs are 50 million, but that 22 million longs opened here, and then in the next minute, this minute would start at 0, it would start down here, and then we had 30 million longs entering, and then after those 30 million entered, the next time, 47 million longs entered. So this was actually a very important point in price. This was here. So 2229, as you may be able to see at the bottom part of the screen, it's a little bit cut off, 2229, that was here. So we had the largest amount of buying actually at the very end of this uptrend. And we even had some buying here with this doji candle. This is typically a spot where we want to sell or to short, but one thing that I do want to say is do not trade against the trend on high momentum. We would not want to short here. And how in the world would we know, well, not to counter trade against these kinds of markets when longs are spiking? Well, when you see a spike in longs, strong bullish move in the early stage of a trend, that's typically going to be bullish, and that's what we have here. This is not a spot where we want to sell. It may even be a spot for a short-term buy, as the amount of demand, the amount of buyers available have probably already not all bought in yet. They all buy in at the very end, as you can see here. So we begin to see weakening bullish momentum here, and then we finally get this kind of high tail with a move down to here on the 1 minute. And this is indicating that many traders have just bought in and price is going to have a harder time moving higher. The really interesting thing is that we also had a spike in shorting at 2230 and a lot at 2231. Here's what happened at 22.30 and 22.31. We have a lot of shorting here and here, so price just really isn't able to go much lower. Why? Well, we don't really have a very strong bearish result as price tries to go down. If this candle had been down to perhaps here, maybe it would have gone even lower, but we really don't see that this amount of selling that's occurring here is really doing much, as you can see here. And we see that again here with this spike in buying and then the subsequent spike in selling here. That occurred right here, where we had a spike in buying that occurred as price went a little bit above the high, and then many traders were shorted here, making it much harder for price to move lower. One interesting thing to note as well is that with all of this buying, with the market being 58.6% long, this is what ended up happening. Price consolidated for a bit, then moved down very, very rapidly. Now, you don't want to just look at sentiment in time and sentiment in price, but we want to look at sentiment and price spot. So what I mean by that is, let's look for this place where many buyers actually entered. Many of them entered here-ish, and many of them entered here, and many of them entered here. These kinds of price opportunities, price areas here. You may notice that price had a much harder time moving past these levels here. The reason that occurs is because of buyer exhaustion. When price goes against these traders, some of these traders do not want to take a loss. And in order to avoid a loss, you can try to trade at break even, exit at break even. So what happens here is that as price tries to go high momentum to the upside, many of these traders who had previously bought, so they're now positioned buyers, become sellers as they all sell at break even here. Happens again right here. Price goes down, and any traders who had held their longs from here and still think it's going to go up as price goes down here, they may be worried and not want to take a loss. So demand begins to pick up. Price goes right up to the price spot, up to here. And then many of these traders sell at break even or at a slight profit. And then that subsequent selling continues and pushes price lower. So that's the kind of way that I would recommend thinking about sentiment, as not just related to time and the price candlestick, but also the price level horizontally, as you can see in opportunities like this. So now I want to look at a more calmer example here. We only have about 4.7 million entering here, shorts, and 4.6 million shorts entering here. In contrast to this, where we had a large amount of buying and selling. But this was still a very interesting price spot. So we could see that at 232 and at 235, we had a large amount of shorting. This was 232 and this was 235, right before the price spike. All that was happening here was we had a large amount of shorting here, but price wasn't able to have much of a bearish result. And because of that, because of these low tails, just the rejection to the downside, and the many shorts that were entering here, many of them likely got liquidated, which in the short term would push price higher. And also many of these shorts may have flipped their positions and tried to buy. So that amount of demand that's coming from this price area shot us up to here. So when we see moves like this, what we're looking for is not to enter in periods of high volatility, but in periods of really low volatility like this, or even here. Because it's this period right there that's the sweet spot of entering a sentiment type of trade, where you wait for price to flatten out as supply equals demand, and then demand is greater than supply. That occurs here. So this is the kind of spot that we want to enter. So here's another example that we have. At 113, we had a spike in shorts. We also had a good amount of shorts at 112 and a good amount of shorts at 111. So let's look at 111, 112, and 113. 113 is here with this very bearish strong candlestick right there. 111 and 112. 111, 112, 113. So why would it actually be perhaps not a terrible idea to exit a short or buy anywhere around here? Well, what we see here is that we have an established downtrend, meaning many traders on Bitmex know that the market is moving lower. And then what we get is a massive jump in volatility, ATR. And after we get this massive spike in ATR, and we also get this massive spike in selling, price just has a harder time moving lower. And it begins to move higher. But we do have some supply that is still lingering, meaning there are still potential sellers who would like to sell. So what we see is that price begins to curve down here until we get another spike in sentiment here. And I think that this one would have really stood out, because if you were looking at the 60-minute and just saw this, you would see a spike of about 8 million, 7 to 8 million shorts right here, much higher than any other kind of here. It's an outlier. And this is alerting us to probably want to buy, unless it's a very strong momentum candlestick, of course. This is not strong. When you see a low tail, the tail that is actually half the entire body, and we see a volume spike, this is just the type of trade that we would likely want to buy, or potentially look for lower volatility as lower volatility occurs here and here. This is a potential buying opportunity here and here, just by looking at the sentiment. You may also notice that many traders were shorting here, and that may have been why price had a harder time moving lower, because any of these shorts who were at a loss may want to exit at break even, which creates demand at these price points and causes price to move higher. And this was what ended up happening. Price moved much, much higher as we had a large amount of shorting from the retail crowd. It liquidated them, and then it moved down. All right, so now let's take a look at another spike in shorts. We have at 8:18, we have a spike in shorts of 15 million. And at 8:38, we have another spike in shorts of about 28 million. So let's take a look at 8:18 and 8:38. Well, 8:18 was here, as you can see, right there. And we do have a spike in selling, but you can see price does go lower after retracing immediately with all of that selling. The reason this occurs is there are still more potential sellers to sell into this downtrend, but even buying here would probably not have been terrible unless you put your stop loss, here or got liquidated here, because we did have the subsequent uptrend. But what also occurs is we just see a lack of demand to the upside, and then we begin to see this. And then when we see this, we actually see a much larger spike in selling. So if you had been cautious and not entered here because you think it's not large enough of a spike in selling, and then you see this of 28 million shorts entering, it's probably a pretty good sign that the market's going to be moving to the upside. And that's what happened. Price went immediately upward after this occurred at 8:37 and 8:38 with that spike in shorts. All right, so for the final example that I want to show here, this one's a little bit more complex because we see a spike in buying at 13:01, we see a spike in buying at 13:03, and then we see a spike in shorts at 13:04. So what this actually means is this. We actually had a overall period of low volatility, but this is 13:01, and then this was 13:03, where we had a large amount of buying. And then we see a spike in shorts with this strong bearish candlestick right here. But this is not a type of spot where we think it's oversold and we want to buy, because really two reasons. One, we had a large amount of buying that occurred from here to here. And two, this is just the beginning of the downtrend, as you can see. When you see a large spike in shorts, and then you also see a large bearish engulfing candlestick that goes much, much lower, like this or like this, that typically might actually be the beginning of the downtrend. It's only when we see something like this and then we see a massive spike in shorts here that we're looking to probably buy. So this is where this is a little bit more complex, of course, to look at kind of overlapping longs and shorts and moves like that. But this is more common, I would say, than these very aggressive moves like this that occur, where we want to counter trade against this. Okay, so now I just want to do a quick look at Coinfarm.online, the site that I pulled this data from, and just explain how it works. So this is 1 minute candlesticks, as you can see here, and you can put on the 30, the 60, the 2 hour. You can also see the amount of shorts and longs percents here, all that data. And then you can also see the hourly. So every hour it creates a tick of how many shorts and longs have entered. I haven't really found this as helpful as I found this with the 1 minute bars, because this can be a little bit of on a lag, whereas this one's updated every 2 seconds. So you're really getting your data quite quickly. You also see, of course, the TradingView signal finder that's located here, how many traders are currently on the server, and 24 hours shorts versus longs. So one thing that we can even look at is a direct example right now. 5:02, we had a spike in shorts. And at 5:03, we had another spike in shorts of 16 million and of 21. Let's go take a look at what was happening at 5:02 and 5:03. Well, 5:02 was here and 5:03 was here. So here and here, we got a spike in shorts and a lot of selling, but we're already in an established downtrend. So when this kind of move occurs, we're going to expect a bullish retracement, or at least a bullish reversal, or at least a retracement to the upside. And then what we saw was this. We then see a spike in buying at 514. What was happening at 514? That was this candle here, right about at the end of this uptrend right there, as you can see with that high tail. Everyone buys here, everyone shorted here, and then everyone longed here, and then price is doing this right now. So really, I've found that Bitmex sentiment is a really wonderful tool to try to trade against the crowd. A lot of different ways you can use it, but I think that trading against the crowd on lower volatility moves can be one of the better ways to use it overall. And if you want to see more videos like this or want to suggest or vote on a video, you can head over to my Patreon and you can request a video. Happy trading.